Okay, so this is our first 2021 DeFi highlight. Well, anyway, last year. Thanks to DogeWhale community for sponsoring the pizza and beer. Okay. Well, it's not here yet, the pizza, but so I've been doing research on the DeFi stuff for the past hardcore research the past maybe 3 months, but then I've seen it start up actually in the September of 2020 when Uniswap actually did their first airdrop. I remember that at that time. I remember that time they gave out 2,000 Uniswap, if I remember correctly. Anybody actually played with that? But these are just some of the DeFi projects. Pretty cool that I've researched so far out of thousands for this year. So the first one I'm gonna go over with you guys is the Bogged.Finance. So this is a next gen utility for DeFi, meaning that right now the way DeFi works, if you do any swap on Uniswap or Sushi Swap, when you swap one Ethereum for another Ethereum, you're doing a market buy, right? So there's no limit orders right now. It doesn't even exist for certain chains. But Ethereum had a 1-inch exchange. It did do limit orders, but it doesn't like work that well supposedly from what I've been reading. The next one was Bogged.Finance, which came out earlier this year. So they mainly work with the Binance Smart Chain and the Matic network. So what's really good about them, you could do limit orders now on the DEXs, which is a huge deal. So you got like some crappy coin, some dog coin, Shiba Inu or whatever. If it goes to ever go to $1 and you're falling asleep and you miss that opportunity, it's 5-minute period, you'd be screwed, right? So now you could target amount. If a Shiba Inu ever hits like $1, or in this case, Ethereum hits $9,000 while you're asleep, it'll sell automatically. And this is not a centralized exchange too. It's just it's a DEX. So that's a really big deal. Very, very big deal. The only catch is that you got to pay $2.50 in the Bog token in order to use this functionality, which makes the Bog token a utility token. And it's that's one use case for the Bog token. And aside from just limit orders, they also do trailing stop orders. I don't know, you guys familiar with trailing stop? Yeah, super cool for a DEX, not a centralized exchange, but a DEX, a trailing stop order system where, you put in 1 Ethereum and then you get to sell it as it moves up in profits. If it goes to 9,000, and then you could like sell if it ever dips by 20% and just keep your profits. Very big deal for a DEX to have something like this, a DApp to have something like this. But sad, it doesn't work on Uniswap, only Binance Smart Chain. So I don't know, you guys familiar with Binance Smart Chain? No? Binance Smart Chain is just a fork of Ethereum. So just think of Ethereum, but it's just called Binance Smart Chain, but the fees are like 100 times cheaper. That's why you're able to do a lot of this stuff and you get to experiment a lot. Yeah. So with the Bogged.Finance, we have the only issue is that you're actually giving permission to Bogged.Finance to access your funds in the address. So technically, they can drain your entire address if Bogged.Finance gets hacked somehow. So that's one pitfall about it. So for security purposes, it's always good to create a whole bunch of addresses, one for each different application you do. One for Uniswap, one for Bogged.Finance, one for Sushi Swap. Keep it separate. That's the best way to not get hacked and limit your losses if they do, right? And Bogged is actually hacked earlier this year in May, which plummeted their token price to like pennies. And right now they're trying to move it back up to, I think the highest was like $10 or something like that, $5. So that's something it's like $1.25. But the thing that they're building is pretty hardcore what they're trying to do. And if they're successful in it, I could see it be worth pretty penny maybe, because it's actually a pretty useful tool, I have to say. One of the most useful tools that I've seen so far. And if you guys do any of the trading, it's best to use MetaMask. Don't use anything else. It's from my experience, MetaMask has very high security. Not that it's high security, it's more up to date with the Ethereum related stuff. You have lower fees, and it's updated more than the other wallets when it has to do with Ethereum or its forks stuff. And then here is OlympusDAO, a crazy project. If you've seen it in the beginning, I remember I saw in the beginning, I was like, no, it's a scam. 7,000% APY? No way, impossible. But from my research, it's actually true. It's the APY is huge. It's insane. It's really based off of the game theory of why this works. And obviously it seemed like a scam if you first saw it until maybe somebody else told you to take a look at it. So the basic concept is from the Prisoner's Dilemma, if you guys are familiar with it. It's part of a game theory where if you have two prisoners, Dave and Henry, if Dave rats out Henry, he gets to go for free, but the other person gets screwed. And same thing the other way. So in this game theory, the most optimal option is if they both agree and collaborate and say they're both not guilty, then they both win out versus one person losing and the other person losing. So taking this game theory and applying it to DeFi, OlympusDAO, keep it in mind, now you have two investors. If both investors to have the best outcome for the project itself is that if they both stake their tokens, which is basically locking up their funds where they can't sell or buy, it's the best scenario, which is why it's a 3-3. 3-3, you might see it around Twitter sometimes or in the crypto space. This is what it means. This is what they're referring to, 3-3. This is a meme, actually, 3-3. So now if one investor decides to sell and the other one decides to stake, it would be a neutral position where it's a positive and a negative. But the worst case scenario is if both investors sell, it's a negative, and that affects the project overall. So as long as everyone understands how this works, and the reason why it's such a high APY is because of this. It attracts all the degenerate gamblers, to go and stake and earn that APY. Because if they unstake, the APY goes up. And then it makes them want to go back in. And then if, it's all this crazy game theory. I don't know the math fully behind it. This is just like really skimming the surface. There's a lot more to this. Yeah, so it fluctuates as more people put in the ARM token, as more gets locked up. Like literally, like 90% of the supply of ARM is staked, is locked. It's only 10% liquidity. That's how much people are willing to give up the ability to buy and sell to be able to do this. And then after you stake, supposedly you get a SOM, a staked OM token, and then you use that as a secondary coin. I don't even know how it works exactly, but it's very complicated. This DAO is extremely complicated, but they definitely do have something going. It's a very big experiment. That's for sure. They were so successful this year because also the other thing you gotta keep in mind that these guys launched early this year. And they were super successful during the summertime. And there's a whole bunch of copycats already. It's like over 50 different ARM forks. And the APY on these other forks, they're like in the million APYs. Like, that doesn't make any sense. But these are like the pump and dump schemes, I would imagine. Because back in the early 2000s, I don't know if you guys remember in the early 2000s, before Bitcoin, there was a HYIP pyramid schemes. It's called high yield investment programs, where they were paying like literally 20, 30% a day. And you had to deposit a ego currency at that time. That's the version of Bitcoin at that time, but it got taken down by the government. And they used that for basically funneling all this money to for all these pyramid schemes. But now this is the future of pyramid schemes, and I could totally see it. Like for this, so the way it works, they incentivize you with the game theory, like, oh, you lock up your coins, we'll give you even more tokens of the same coin. And then when you do lock it up, there's a time delay. You can't just take it out immediately. They purposely set it like 10 days or 30 days, and it just let you take out a little bit at a time, which is what a pyramid scheme is, right? And then as it gets more people into it, eventually they'll keep ballooning the return percentage. But the thing is that this is a financial experiment. We don't know, how long it will last. You can't really, I don't know how it, yes. Well, because the thing is that you're locking in your coins, but then you're paying out more from the locked, because you locked it already, right? And then you want to leave your money in there to get more coins. And yeah, it might not be a pyramid scheme, but I don't know. It just seems like it is at first hand. Oh, so what will fund it is there is actually a reserve currency. There's a reserve. You actually create bonds. I forgot to mention that actually. It's another column called bonds. So what it is that you actually you buy OlympusDAO bonds, which are Ethereum or your other crypto like Bitcoin. You give them your valuable crypto, and then they'll give you a bond. And then that's how it makes the more valuable as a reserve floor price for the and then it's a floating currency. So then people keep bidding it up because there's so little supply of it, because everyone staked it to get more So it's a big rabbit hole, very big rabbit hole, very big rabbit hole. I haven't even played with it. I just did research on it right now. So it's definitely, if you guys do research, report back. And then if you thought that was more complicated, what the hell? So this is the next thing, the Tokemak. So this is my favorite DeFi project, Tokemak. I don't know. When I first saw it, I was like, whatever. But then I saw, I was like, oh, there's robot mechs, Gundams next to it. I was like, oh, okay, let me take a look. Tokemak solved the liquidity problem of the DeFi world. Huge deal, super big deal. This is how I potentially see the stock market being funded maybe in the future, maybe. So liquidity, every crypto project or company needs liquidity. So you need buyers and sellers for any type of project. If you don't have buyers and sellers, your token or your shares are worthless, right? Without any liquidity. Currently in the DeFi world right now, in Uniswap, when projects launch on Uniswap or some other DEX swapping service, they have to create more of their own tokens. Reason why is that on these DEXs, they need to attract regular users that has a specific token, let's say a dog token. So somebody buys a dog token, but they don't want to, there's no incentive for them to, hey, all right, let me put it up for sale on the liquidity pool in an exchange. There's no incentive. So the creator of the token, they usually create more tokens as a result to incentivize users to join a liquidity pool to be able to fill up the order books. Otherwise, there'll be no liquidity, right? So what that causes is a lot of inflation for the current coin. And the other thing is that it creates a new job position nowadays. It's called DeFi farmers. You know, if you guys heard of the role, it's pretty big for the past 2 years. Huh? Yeah, DeFi farming. It's literally DeFi farming, literally. Like you go from one project to the next project. And then as the project stops the incentive to give out free tokens to these liquidity providers, the price tanks usually. Most of the time they tank because there's no reason to stay in the liquidity. There's no incentive anymore. And that poses a really big problem for, especially for liquidity, if you want to, just get like millions and millions of liquidity into your project. So here, what comes next in the space is Tokemak. So keep in mind, Tokemak is literally very, very new. It came out in like August, and they kind of launched in November. Not even a month, really. Well, not a month, but like a couple of months already. But what they figured out what to do is tokenize liquidity, and it's pretty ingenious what they came up with. And also they solved impermanent loss. If you guys are familiar with impermanent loss, when you're in a liquidity pool on a Uniswap, as prices move back up and down, you're actually losing out over time. So these guys solved impermanent loss, and that's a major deal. So with liquidity mining, it creates inflation for your current token. And it's obviously not sustainable in the long run, because the thing is that you can't just keep providing free coins and tokens to your users just to provide liquidity. Tokemak actually solves it and makes it sustainable by what they call a Tokemak reactor. A reactor is a way where it's a pool, something similar to a liquidity pool. But the thing is that in order to even get a reactor, you need millions and millions of dollars to get it. So small projects usually cannot get this. It requires a community effort with people with millions of tokens. And then the other side of the liquidity factor is being able to have a Tokemak token on the other side of the reactor to vote into where the liquidity goes. Because I forgot to mention is that Tokemak has a gigantic reserves of stable coins, USD and Ethereum and some other coins, where they pair it with other project coins. It's like millions and millions of dollars, where if voted in properly using whoever owns Toke, you could redirect where the maybe $10 million of liquidity goes to a specific project, like FSX or something like that, or Sushi. And then now they solve the problem of having the token creator create even more tokens. Now they just need to get the Toke token to vote where $10 million will go. And that effectively solves the problem instead of diluting the token supply. All right. And currently, so aside from just providing liquidity in a pool for users, a lot of projects, what they've lately been doing is that, stake your tokens with us, like basically locking up your tokens, so then making sure you don't sell it to tank the price. So that's another way of luring large holders to not sell by providing an incentive. So these are two current models of how liquidity is provided. The future is definitely going to be something like this, where you could direct to different places. And it doesn't just go for DeFi projects. It could go for even stocks maybe in the future. Who knows? If it raises for you have to direct whatever amount you need. And then I have a link here. I'll post it up. It's a really good read, very, very good read how this works. Next one is next project DeFi space is Shapeshift. It is one of the original swapping services. If you've been around in 2013, 2014 in the crypto space. So originally they got shut down by the government, and then they went full DAO during the summer, where they dissolved their corporate entity and just went completely community-based, and the community controls the direction of where things go, apparently. And now, I think the next phase these guys are going to do is become a cross-chain aggregator, meaning that they're going to tap into different cross-swap services like Thorchain, where you could swap Bitcoin to a Monero or to some other coin, where it doesn't have to be on the same exact blockchain. Like Ethereum, it can only do Ethereum tokens, but now with a Thorchain, you could do different tokens with different blockchains. And then these guys are pretty much the front end to all that, and to be able to link it all together somehow. We don't know exactly how they're going to do it, but I think they're going to figure it out. And the community is very, very active. What really caught my attention with Shapeshift in the past couple of months was the fact that they actually won a Tokemak reactor, which is extremely hard because you need millions of dollars to get it, and you need a massive amount of community involvement to even get it. And also the fact that Shapeshift token was released only maybe during the summer, so it's a very low market cap coin. And compared to the other reactors on Tokemak that they're competing for, I'm surprised they even won. It just shows that the massive community involvement, and also the fact that they just got listed on Coinbase, which is a huge deal for a coin that came out literally in June. Is an eye to keep on. Next project, BarnBridge. What they've figured out is tokenizing risk, another essential part of getting people into this, especially people that are not risk averse. I mean, we all know, crypto is super volatile, go up like 20, 30% a day. Some people don't like that. It's not for everybody. And the product that these guys built is pretty interesting. The fact that they've created a method where you could create a they're basically providing a fixed income somehow for people that don't want to take the risk, and the people that do want to take the risk to get a higher yield on their investment. So what they call is it's called tranches. The term that they use, they have a senior pool tranche and then a junior pool tranche. And then senior pool, you get a lower return, and in junior pool, you get a higher return. But then your risk, the volatility of whatever project that you put it in. I haven't really played with it fully, but just doing some minor research, it seems like this is the way to go for people that just want to just sit around and just collect a safe income without having to worry about the volatility. Yeah, you're not trading here. What do you mean? Well, it depends on which coin you're staking, like USDC or DAI. This is staking stable coins, right? Like this is just stable coins. Yeah, not like the token. Well, they're doing something with this with the stable coins. I'm not sure what they're doing, but they're giving you a return on it, and it's a stable return supposedly. Yeah, it wouldn't go to 20 spend a day, but the thing is that, let's say you have $1 million worth of USDC, but you want a fixed return of whatever 5%. But most places don't give that kind of return. Maybe you have to invest in some Bitcoin converting it, right? Yeah, I don't know. I took a screenshot of this somewhere. This might not be super up to date. It might not be super up to date, I don't know fully exactly how this works, but the idea is basically trying to provide a asset where it pays out a fixed dividend yield, where you don't have to worry about the volatility, but also keeping your initial investment, even though it's a stable coin, right? Because right now you deposit a USDC on Coinbase, they pay like, or Gemini, they pay like 1% or something like that. I don't know what, but some of them get higher, right? Yeah. So they're doing something with the coin. Yeah, you're not in charge of the coins. So even this one, you might not be in charge of your coins too. I'm not sure exactly their play here, but just from my minor research and discussion with my friends about it, it seems like, I mean, see, I have this is still all experiment because this is very new. It's like literally like maybe a year old only. So we don't even know like where this is gonna go, but it's just something to keep your eye on. That's all, right? Yeah. And now we're on to the DogeWhale aspect. So I mean, minus the coin, I mean, it's silly. It's just a dog coin. Memes. A lot of people not into meme coins. I'm not into meme coins. I don't really care about it. But it's the fact that they really innovated in the DeFi space to do certain things, which I've never seen done before, or maybe just because I've never seen the tax system that they've implemented. And also a fact that, dog coins are not going away. Dogecoin is here to stay, obviously, with Elon Musk tweeting about it all the time. So when I found out about this, I was like, okay, maybe it's just another scam, maybe pump and dump. So I did a little DD, still got to stay skeptical. So D5 Labs is the guys that are behind this project. So D5 Labs, they've only been in existence since October of 2020. So not that long, but they have a track record of producing projects from my research. And also another issue, what some people might have is that it's an anonymous team. So some people might not like that because this very well could be a rug pull and they just leave with all your money. But they do have some interesting executions. As you can see, most of the dog coins or just meme tokens in general, they're always going to be like hundreds of them by now, but they're always going to be like maybe a top 5 or top 6. So what the DogeWhale setup did was create a reserve system. So as you buy and sell this coin, there's a tax of 1% or 3%. And what it does is actually in the background, it's actually buying for the top 4 coins, and then they're just holding it in their smart contract. Eventually, you'll be able to redeem for these reserves, supposedly. And because these reserves keep growing over time, as people use this token, the floor price of DogeWhale will eventually, should technically increase as the reserves increases. And also, they have a built-in panic system where if the price drops by 50%, the tax goes bonkers to like 10% or something like that. And that's a feature that I was like, whoa, that's an interesting feature. I don't know how it will play out because it's all just an experiment, okay? But it's another thing to keep an eye on, just the tech aspect of it. And now the main question is like, it's just a dog coin and that sits on the DEX. It's not even on a centralized exchange. Now, the thing that most people might be asking is like, who's providing liquidity to the buyers and sellers? But apparently they have like $1 million of liquidity in this coin from the tax system. So a percentage of the tax actually goes into the buy and sell orders just to fill up the order books. And that's a really clever way of providing liquidity versus other methods that people have been using nowadays, which is minting more coins or doing it another way. So maybe this tax system might actually apply to something else in the future, another project, might not be a dog token. So it's basically, if minus a dog, this is kind of what Olympus does, because Olympus has a reserve too, because their own token is actually, there's a reserve of cryptocurrencies backing the own token, and there is a floor price to it. The reason why the own price right now is $300, but the floor price is supposedly $90. Is there's a premium on it for whatever reason for Olympus, and yes, because of the coins they're holding, exactly, right? So because there's a reserve backing it, but this is trading at a premium for whatever reason, most likely because of the interest that they're paying out. That's why. And then as more people buy bonds in the OlympusDAO, the reserves increases. So DogeWhale took it a different way. Instead of having it voluntarily buy a bond in the OlympusDAO where you're voluntarily giving your Ethereum, DogeWhale is actually taking your coins and buying it automatically in the background, which you don't see. It's a really clever way. I don't know how well it do. It's definitely something to observe. Okay. So those are my 6 projects, right? 6 projects that are pretty interesting for 2021. And we see how it goes in 2022. Yeah. Yeah. What do you mean? Which project are you talking about? Olympus or DogeWhale? Olympus? Yeah, so the Olympus DAO, so what they have is called bonding. In order to build up the reserves in the Olympus DAO, you could buy bonds from Olympus, and then let's say you give $1,000 worth of Ethereum to buy a own DAO, they give you back I think or Ethereum or something. I don't remember. I don't know the full story behind it, but it's a way of building up the reserves to back the own currency. Because the thing is, their model is that they want to be the cryptocurrency's reserve currency. Yeah, so like how the dollar was used to be backed by gold. So they wanted to just create a new type of currency for the entire crypto space where there are valuable assets backing this coin. Whereas free floating versus a peg token where it's always going to be a dollar, right? It's always going to be a dollar. Like a USDC is always tied to $1. It's never free floating, where it could be worth $2. So OlympusDAO is just taking a different approach. What do you mean? Yeah, something like that. Yeah, because when you redeem certain tokens, I think I'm not sure. I don't know about the OlympusDAO because I don't know 100% about it. But supposedly you could get the reserves out, like you could get whatever is backed by, supposedly. I'm not too super clear. I mean, they're still evolving a space because this is less than a year old. Yeah. Uh-huh. Yeah. Yeah. Oh, yeah. That's an interesting use case for that. Yeah.
It's kind of like balance like that.
Yeah.
So, all right, we have our coin is going to not be able to coin.
Oh, okay.
So all right, so this is the thing. If Olympus is basically the main holding company.
Yeah.
All right, so NIBLS would be that isn't that holding company. NIBLS coin. So that's what I was looking at. That's why I asked you. I'm trying to understand what you said before. I was moving on my notes. I read in my notes, like NIBLS spot versus waiting for those altcoins to actually trigger.
Yeah. Yeah. I mean, I'm still very new to it, so I don't know like full head on. So I mean, obviously, you guys could do a little more research on it. Like, anybody know Olympus now? Like anyone that came in? Huh? Yeah. Oh, you never heard about it too. Oh, you heard about it before. Yeah, they're the biggest DAO actually. They're the biggest DAO. They have like total value like billions of dollars supposedly, and it's just yeah, that's why they have so many copycats, and it's not even a year yet. They have like over 50 projects that copy them, and it just shows that it's a valid idea, I guess. But it's still innovating. But even they are trying to get a Tokemak reactor, and they don't really even have one supposedly. Yeah. But yeah. Our presentation's done, so you guys can hang around and just. But yeah. Oh yeah. So got pizza. So you guys wanna before it gets cold. Okay. Web3? Oh, that's just techno lingo.